What's going on, guys? It's your boy EP and we're back again with another video. Guys, this is a very important video, but first I want to start by saying happy Valentine's Day to you guys out here. We're hopping on Valentine's Day. We're taking a quick break to hop on and get this video out to you guys immediately, and shouts out to the 145 of my subscribers that hit that subscribe button. Shouts out to y'all. I need y'all to go crazy on the like button in this video to make sure everybody and it reaches the masses so they get the information that is necessary, because it is tax season. Let's not waste any more time. Let's get right into the video. Let's go. It's that time of year. You guys have been with me for a while now, and I know my squad has been making money in 2020 inside the stock market. Now we're rolling into mid-February, and guess what? Guys, if you took profits on some of these trades, like myself, I did, we gotta make sure we take the proper precautions to make sure we know what to expect when we go see our CPAs and our tax preparers. And if you guys know me, graduated Kennesaw State University, go Owls, and I graduated with a degree in accounting. I actually studied for the CPA exam, never took it. Fortunately, I was able to land a role as a real estate investment banker, now turned mortgage loan originator. Now, guys, besides all that, I'm hopping on here to just make sure I get the basic information out to you guys when it comes to being prepared and understanding short-term capital gains and long-term capital gains and what we're going to expect when we go and sit down with our tax preparer. So I've put together a few of the questions, most common questions that you guys may have, and we're just gonna answer them and gonna knock them off the bat. Question number one, will I pay taxes on my gains if I don't sell my stock? Guys, easy one. You're not going to pay taxes because those are not realized gains. When you have, let's say on Robinhood at the bottom of your app, you have a total return and it says whatever percent, unless you sell that and it turns into buying power and you realize that gain, you're not paying taxes on those gains / profits yet because you did not take profit. So those are unrealized gains, no taxes. If I day traded a stock and made profits, do I have to pay taxes? Yes, those are short-term capital gains. So those are subject to short-term capital taxes. Let's just keep it simple. You made one day trade and you made one big profitable day trade all year, and in that day trade you profited $20,000. On that $20,000 day trade, you took $20,000 in profit, you're subject to ordinary tax. So whatever tax bracket you're currently in, you're going to be subject to that taxation. Next question. Do I have to pay taxes if I made profit on a trade and immediately reinvested it? That's a good question. So let's say you guys are with us with NEO, right? We invested in NEO, and people were there for the run up, and then they saw another EV they wanted to invest in. Then they sold their position in NEO, realized the gain, and then they invested it immediately. I mean, we're talking immediately into another EV or another SPAC or whatever they're investing in. Yeah, you got to pay taxes on that, guys. So you guys have to understand that if you're going to be jumping from hype stock to hype stock and taking profits from one play to another, you guys have to understand the taxation consequences that come with that. Because you're taking a short-term capital gain on that position and then jumping into another one. And then you say, well, I never withdrew the money. It never got into my account, AP. It never hit my checking account. Bro, you took profits. That buying power, those funds, you could do whatever. You could have reinvested. You could have took it out, went to a strip club. No matter what, you are getting taxed on it because you took profit. So make sure you guys understand that. And we're gonna also, that leads me to long-term capital gains. Because if you hold a short-term capital gain, or when you buy a stock, you take a position and you sell it for a profit before holding it for at least a year. If you have that position for under a year and you sell and take profits, it's a short-term capital gain and you're subject to ordinary taxes. So whatever tax bracket you're in, you're subject to that. Now, long-term capital gain, which I kind of preach on this channel, as you guys know. I look for high conviction trades, and I look to buy and hold. Because when we're talking about long-term capital gains, depending on how much money you make, if you hold a stock for over a year, you may not actually pay any taxes on it. After the 365th day of holding the stock, you can sell it for a big profit. And essentially, depending on how much you make, I have the chart up now. You see the chart, those are your taxations. You're looking at anywhere from 0, 15 to 20%. Now, that's a big reduction when it comes to short-term capital gains, when you're looking at potentially going from a 0 on long-term to paying up close to maybe 40%, depending on how much gains you took on that short-term play. So be mindful of that, guys. And also, in tomorrow, you guys will be having in your Robinhoods, your Webull, M1 Finances, they're going to be releasing the tax forms. The 1099B, guys, that tax form is going to show your bottom line, because you guys want to know that what exactly is going to show what you made in the market, because all you guys are killing it in the market this year, but we got to pay our taxes and we got to be smarter in 2021. I've always recommended buying and holding. You may have FOMO in the interim, but if you're not believing in a company for the long term, you're going to pay short-term capital gains. So you guys have to move smarter in 2021. So we're going to attack this diligently moving forward, because we're going to have a lot of plays in 2021. But I want you guys to be very, very precise about the plays and the companies you invest in, because I always preach long-term investments. They have better tax incentives, period. Next question. How much taxes do I have to pay? It's all relative. It all depends. So depending on if it's a short-term capital gain versus a long-term, how much money you made in the market, how much money you make outside of the market, your tax bracket. So that all depends. Once again, I'm gonna put the tax brackets up for a short-term, ordinary income, and long-term. You're taxed on a different pay scale that's gonna be much more generous in regards to keeping that money in your pocket. Long-term always wins. Time in the market always wins, guys. Okay, sold my stocks for a loss. Bro, what do I do? Well, don't forget about that. Don't forget about the losses, because that's actually gonna be a deduction when it comes to when you're talking to your CPA or tax preparer. Those losses that you took, man, I got crushed with Sundial. Man, I got crushed with GME. First of all, y'all weren't even supposed to, y'all shouldn't have been playing with those stocks anyway. But let's say you took a huge loss with GME or Sundial, and you got FOMO, and then you took a hit, and you realized the game by selling. You sold and took a net tangible loss. Keep in mind that net tangible loss is going to decrease the amount of taxable income that you may have had that year, which is a good thing. You want less taxable income and more of that unrealized gain in your portfolio, because long term you want to have that exceeding the year mark, to where if either you're comfortable selling over a year, after a year, and paying that 15, maybe 0% tax on those long-term gains, that's a win. That's a win, guys. So keep that in mind. Don't forget about your losses. They're useful because they're going to be used as deductions, and they're going to counteract the taxable income. Taxable income, the more your taxable income, the more you're paying Uncle Sam. But we're going to pay our taxes, though. We're not breaking the law, none of that. That's pretty much it, guys. Oh, yeah. To my crypto guys, listen, I know y'all over here, man, crypto. I don't got to pay no taxes. This is uncentralized currency, no taxes, right? Right? Guys, no. If you have crypto, and just like a stock, if you took gains on your cryptocurrency within a year, you're going to pay short-term capital gains.
No, God! No, God, please, no! No! No!
It's actually easier to track the Bitcoin than it is tracking the stocks that you're doing in your Robinhoods and your M1 Finance. So make sure you understand that. Don't think you're cheating the system. Just like Dogecoin, Bitcoin, and Ethereum, all those cryptos, you buy and you hold if you believe in the currency and the coin. But if you're trading it, you're going to get taxed. That's the end of story. So guys, make sure you smash that like button. You guys are killing it. I need you guys to get this out to all the people that you know that are just rolling and all that doing in the market from 2020 and riding with us with all the stocks. Make sure they're not spending all that money cashing out, because Uncle Sam is coming for his cut.
Tell him to bring me my money.
Don't get caught up like those rappers that evade their taxes. We're gonna pay our tax, but we're gonna move smarter. We're gonna hustle harder, but we're gonna move smarter, guys. If you like what we're doing, smash that like button. Drop a comment below if you knew all the answers to these questions, and just share the video. Hit that like, and until next time, guys, it's your boy AP. Happy Valentine's Day. Peace.
Hold up. Tell him to bring me my money.